Trump's pause on tariffs on consumer electronic goods boosts investor sentiment. But he says nobody is getting off the hook, suggesting further tariffs could be on the way. And we look at how increasing US-China tensions are squeezing Taiwan's chip sector. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian stocks started the week higher as trade war fears were tempered by Donald Trump's announcement of tariff exemptions for electronics. Hong Kong stocks led gains in the region, with the Hang Seng Index up 2.5% and Hang Seng Tech Index trading 3.1% higher. Mainland China's CSI 300 was up by 0.58%. Trump exempted smartphones and computers as well as components such as semiconductors from his reciprocal tariffs on Sunday, but suggested it would not be permanent. Markets rose on the news, though the dollar weakened and safe haven gold hit a fresh record amid fears the relief would be short-lived. Meanwhile, exports in China soared by 12.4% year-on-year last month, beating expectations as Beijing navigates mounting trade headwinds sparked by US President Donald Trump. For more on this, we're joined by Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Now, Tim, it's almost as if Trump changes his mind on these tariffs by the day, which really is keeping investors on their toes. Do you think this relief will be short-lived?
Good to be with you. Yeah, that's certainly one scenario, as it could be a fleeting moment, this uptick in markets. I mean, I think if you look at the situation right now, yes, the exemption for some, key tech products, like you mentioned, smartphones, semiconductors, that gave a reprieve to markets, and we saw that play out with the move higher in Asian equities today. But already we have heard from the White House that they could be temporary, those exemptions, and that we'll probably get some further clarity on how semiconductors and iPhones, etc., fit into the tariff picture in the coming days or perhaps weeks. So I think that, to see a continuation of the rally that we saw on Friday in the US and today in Asia, we're probably going to see further de-escalatory measures come into play from the White House, but I think we could be in for some choppy trading in the meantime.
Right now, the White House has paused the majority of tariffs for 90 days, but it's the uncertainty of what comes next. So how are markets navigating this?
That's the tricky one for markets, which hate uncertainty. So one situation is that we could have a financial market malaise for 90 days where we sort of don't know what the landscape will look like in 3-6 months' time in terms of the tariff picture. So in that scenario, it will be difficult for markets to gain any sort of upward traction. I think it will be a bias to the downside, similar to what we've seen so far in April. But there's also a scenario where perhaps in that 90 days, Trump does strike some key deals with, let's say, 3 or 4 countries. Maybe he gets the tariff levels down from the 20, 30, or even 50% we're currently seeing down to single digits. And if that played out, then I think we could see a resumption in the uptrend of risk asset stocks that we have become accustomed to over the past few years. So we still don't know how to play out, but there is scope for potential move higher in markets if Trump manages to put pen to paper on some trade deals in the coming days, weeks and months.
And looking at China now, we're seeing reports that exports skyrocketed last month. Does this suggest that actually this trade war won't hurt China as much, or is it a sign of serious stockpiling ahead of the tariffs?
I think it's the latter. When you look at the numbers, I think there's a lot of front loading of shipments. The tariffs on China, they were pretty well telegraphed, you have to say, by Trump, even going back to the campaign trail last year. So the markets knew they were coming, and a lot of businesses were trying to get ahead of that and trying to evade the steep tariffs that are coming into play as we speak. So I think that accounts for a large proportion of the jump we saw in the export figures. So more broadly, the market's still trying to work out who will be impacted the most by this standoff we're having between the US and China on tariffs. So obviously, there's some that believe the US has a stronger hand to play there in terms of the China being more dependent on the US market. But politically speaking, maybe the Chinese leaders have a bit more room to move there and they can play the long game. So we're still waiting to see how that will play out. But there is right now concern that a prolonged trade war with tariff levels north of 100% is going to perhaps deliver a hefty blow to both economies, and that'll have flow-on effects of the negative kind to the global economy.
Right, Tim Waterer, KCM Trade Chief Market Analyst. Thank you very much, as always. Meanwhile, President Trump says nobody is getting off the hook for unfair trade balances, suggesting that further tariffs could be on their way. The world's two largest economies, the US and China, have been locked in a fast-moving, high-stakes game since President Donald Trump launched a global tariff assault. Tit-for-tat exchanges have seen US levies on China rise to 145%. Beijing also set a retaliatory 125% ban on US imports. In the latest, Trump says he would announce the rate on imported semiconductors over the next week. Meanwhile, Chinese President Xi Jinping has arrived in Vietnam as part of a trip to major economies in Southeast Asia, in what has been described as a regional charm offense. Beijing will undoubtedly be looking to strengthen ties with its neighbors as a trade war with the US escalates. For more, let's bring in Kyle Rodder. He's a senior analyst at Capital.com. Welcome back, Kyle. Now, these tit-for-tat tariffs have been escalating between the US and China. What are the potential economic impacts of these retaliations?
Well, they could be economically dire. And I think we saw the world more or less pricing that in last week, that if the tariffs went through basically as planned on Liberation Day, or as outlined on Liberation Day, or even the 145% tariff on China, that we were looking at a recession in the United States and a recession that may have spilled to the rest of the world as well. So, a lot of the relief that we're seeing in markets at the moment is on the basis that, the Trump administration is pulling back or watering down really some of these tariffs. But nevertheless, it doesn't appear that there will be a complete removal of tariffs. There's still the risks that there will be retaliations from here. And as a result, we're looking at an economy, a global economic outlook that is deteriorating quite quickly.
And it seems as though China is ramping up efforts to strengthen ties with its Southeast Asian nations such as Vietnam, Cambodia and Malaysia. How could this influence the dynamics of the ongoing trade dispute?
Well, it puts the smaller Asian nations in a very precarious position. Clearly, the Chinese are looking to take advantage of this potential discord and antipathy towards the United States to try and secure their geostrategic interests. I don't think at this point in time that they have the same economic interests with Cambodia or Vietnam as perhaps the United States has. And that's where the complexity comes in for some of these smaller Asian developing markets, is that on the one hand, the Vietnamese are going to make sure that their allegiances within the region are secure. At the same time, an economy like Vietnam is very, very dependent on the United States. The kind of engine room of its economy is manufacturing apparel and goods for the US consumer, and they're going to want to make sure that they're not seen to be appeasing China or cozying up to China too much, because that might attract further ire from the Trump administration in particular. So it's very precarious. The US's interests for these economies are strategic as well, but primarily economic. China is clearly using this as an opportunity to curry favor with those countries. Those countries are, of course, trapped in the center of things and have a very difficult trade-off between their regional and security interests with their with their economic interests.
Right, and there is a 90-day pause, of course, for everyone but China. So what are the broader implications for global economic stability?
It's very unstable at the moment, and it's remarkable to say that we did get this big rally on Wall Street last week when the Trump administration announced this 90-day pause on tariffs for most of its trading partners. But if you go back perhaps 3 or 4 days earlier, if you had have said to someone that the Liberation Day trade policy was going to be a 145% tariff on China and a 10% tariff across the board on everybody else, you would have seen some degree of panic. Maybe not the same level of panic as you saw a few weeks ago, but you would have still seen a fairly significant panic, because this is going to rock the global economy. On top of that, clearly it creates a greater competition, strategic competition between the US and China, which is going to destabilize the world even further. And we're also starting to see a bit of a breakdown in traditional trade flows and financial flows that risk financial market stability. So this is incredibly significant. It doesn't look like it's going to end now. And the problem is too that maybe even some of the damage has already been done because of some of the policy and the uncertainty generated by the policy of the Trump administration.
Right, Kyle Rodder, Senior Analyst at Capital.com. Thank you very much for your analysis. Now, in the race for technological dominance, semiconductors are no longer just circuit components, they're strategic assets. TSMC, the chip giant based in Taiwan, is now navigating a complex web of global power play. As US President Trump sharpens his rhetoric and penalties loom, Taiwan's chip diplomacy finds itself caught between billion-dollar decisions and diplomatic duels. One chip, that's all it took. A single AI processor allegedly linked to Huawei could cost TSMC more than $1 billion in penalties under US export control violations. This isn't just about rules, it's about power. America's message is clear: tech must not strengthen adversaries. Taiwan is a global tech beacon, but also a geopolitical fault line. On one side, China watches closely, objecting to every US arms sale and visit to Taipei. On the other, the US offers security assurances while demanding loyalty on tech trade. TSMC is now expected to toe Washington's line or face the consequences. This dual pressure leaves TSMC balancing billion-dollar decisions on a diplomatic tightrope. At a recent event, Donald Trump warned TSMC if it doesn't build in America, it'll face up to 100% taxes. This isn't new. The company already pledged $100 billion in US investments, including 5 new chip factories. But Trump dismissed the $6.6 billion Biden-era grant as unnecessary. For TSMC, it's a clear ultimatum: build jobs in Arizona or face tariffs and a chilly White House reception. Let's get more on this now with William Yang in Seoul. He's an East Asia political analyst. Good to have you with us. Now, President Trump has taken a step back on his tariffs with an exemption on electronics and components like semiconductors. So what does this mean for Taiwan as a major chip producer?
I think this is only a temporary measure because he already said that there's going to be a separate tariff that will come later, and he's likely going to announce it. So Taiwan is racing against the clock to try to negotiate and try to make sure that its chip makers will be exempted.
Right, and Trump has threatened TSMC with a 100% tariff if it fails to move production to the US. And we've heard they're looking to invest $100 billion, but will this be enough to avoid those additional levies?
I think we really don't know because right now, as you said, TSMC, Taiwan itself, all rely on the US a lot for different reasons, economically and politically and militarily. So the Trump administration knows that they're going to keep trying to press and try to get as much concession as possible. And at this point, with pressure from China also rising, Taiwanese companies and Taiwanese government can only try to appease the Trump administration by making more concessions.
Right, and trade negotiations have begun between the two countries. So what is on the table currently?
The government did not reveal any details. They only said that the first call has gone smoothly, but there will be more follow-up negotiations. We are likely going to see the technological sectors and the semiconductor industry being at the forefront of these negotiations going forward.
And as you mentioned earlier, Taiwan is also facing similar pressure from China. So where does that leave Taiwan in all of this?
At this point, the current government has always been more pro-US in its foreign policy and doubled down on its support from the US. So we're likely going to see the current government continue to build a really close ties with the United States to make sure that it gets enough deterrence against the Chinese pressure.
Right, William Yang, East Asia political analyst in Seoul. Thank you very much for being with us. Now a quick look at some of the other top business stories from around the world. Singapore has cut its 2025 growth forecast to 0 to 2%, down from an earlier estimate of 1 to 3% amid weakening global demand due to rising tariffs. The central bank cited tighter global financial conditions and falling export prices as key challenges for trade-dependent economies. In response, Singapore's central bank eased monetary policy for the second time this year to support growth. France is considering a permanent tax on the wealthy as part of efforts to address its growing debt crisis. Finance Minister Eric Lombard says the change would ensure fairer public financing while increasing contributions from high earners. The proposal comes as the country's debt soared by over $225 billion last year, reaching 113% of GDP. The UK has announced $26 billion in extra support for exporters facing new US tariffs. The plan aims to ease pressure on firms hit by higher costs on steel, aluminium and cars. The British government says the move will bring more stability in a changing global trade environment. And the Minecraft movie has made over $280 million in the US and nearly $270 million worldwide, breaking records in a short time. It now ranks as the most successful video game movie ever. The film's strong performance has helped boost overall box office numbers. To Argentina now, where opposition to President Javier Milei doesn't seem to be cooling anytime soon, as strikes, protests and the cost of living are on the rise. Thousands of Argentinians turned out in the capital Buenos Aires for an anti-austerity protest on Thursday. It was the start of a 24-hour general strike, which is also a protest against a new IMF loan. Trains, planes and ports came to a standstill. Banks and schools shut down, hospitals operated with minimal staff. The government says the strike cost the economy around $880 million. The strike follows rising frustration over President Milei's aggressive spending cuts, which include job losses, pension rollbacks and plans to privatize large parts of the public sector, all part of his radical libertarian agenda. Labour unions accuse the government of deepening poverty, accelerating layoffs and failing to control inflation despite official figures showing decline in prices. They say working families are bearing the brunt of Milei's economic experience. Union leaders are calling for the immediate reinstalment of laid-off public workers, the reopening of wage negotiations to reflect the soaring cost of living, and a full cancellation of privatization plans. Javier Faje is a Latin America analyst. He says the main issue is that pensioners might be earning hardly enough to survive.
But the biggest confederation of trade unions in Argentina, the General Confederation of Workers, call and strive for the following issues. One, a free negotiation between employers and trade unions. That doesn't happen in Argentina at the moment. An emergency increase of pensions. Pensioners have suffered a great deal because the government has frozen state pensions, and there have been a lot of protests in relation to this situation. Approval of collective bargaining agreements that haven't been approved, many of which are below inflation anyway. 70% of these agreements are below inflation, but also stop the repression against social protests. These are the main issues. They want a stop in the austerity measures that the President Milei has imposed since he came to power. These are the main demands, and in the last few weeks, the main issue has been pensioners. Pensioners might be earning no more than $300 a month, which is hardly enough to survive. So these are the main demands that trade unions are making. This strike was relatively successful. Transport stopped, universities stopped, public administration stopped, and some unions decided not to go because they are still negotiating with the employers. But it was relatively successful, and it is the third that the trade union movement has actually carried out in Argentina. These are the main demands that they have in relation to the government of Javier Milei. The problem that we have at the moment is that the government has cut all subsidies for social projects and pensions, right? Well, in the case of pension, it's not a subsidy, it's basically an increase, a normal increase. These are the main criticisms. These are austerity measures implemented by Milei to reduce inflation.
In a bold move to secure its raw materials supply chain, the European Union has embarked on an ambitious mining initiative aimed at reducing dependency on external sources like China and Russia. This initiative marks a pivot shift for regions across Europe, particularly in Spain, where rural areas like Beijing are set to witness significant economic transformations. Our correspondent Jamie Velasquez has the story.
Rarely has a European Commission announcement made such an impact on a small Spanish town. In Abenojar, a village of 1,300 people, in what's known as empty Spain, locals are finally seeing a project come to life, one that promises jobs and a reversal of decades of economic stagnation.
Chinese lithium will not be the Russian gas of tomorrow. To achieve that, and to prevent it, the European Union has established a legislative framework. Today, we must extract more and open more mines in Europe.
The future Abenojar mine is one of 47 strategic projects selected by the EU aimed at securing a stable supply of critical raw materials like tungsten, essential for everything from smartphones to satellites. Today, foreign commodity traders have come to see firsthand the extent of the ore deposits.
This deposit contains 90 million tons of resources, which could mean a lifespan of 90 years. The planned production is 3,000 tons per year, representing 20% of Europe's consumption.
Thanks to the push from the Commission, new European mines like this one in Abenojar are expected to begin operations in just over 2 years. The 47 strategic projects represent a combined capital investment of $25 billion, and a second call for new mining ventures will be launched later this year. Mining in this region of Spain dates from the times of the Roman Empire. Constructions like this old mine from the 19th century shows the old silver rush that was once called the Spanish California. Now, new raw materials are reviving the mining frenzy in the area. When the mines closed in mid-20th century, the region lost over half of its population. The mayor of Abenojar hopes the new extraction project will bring back prosperity, especially for younger generations.
We see this as a major opportunity for employment, for socio-economic growth, not just for our village, but for the entire region.
Once fully operational, the mine will employ 300 people directly, with thousands more in indirect jobs over the next 29 years. For some experts, Europe waited too long, too deep for its own opportunities.
Europe had turned its back on mining in recent years. It preferred to buy from other countries, and resources we could have exploited were instead imported. Now we see that it's a very sensitive issue because we need to secure our supply for both economic and strategic reasons.
As Europe races to ensure its industrial sovereignty, villages like Abenojar could find themselves at the center of a green and digital revolution. For the first time in decades, what lies beneath the soil may offer a future worth staying for. Jaime Velázquez, TRT World, Abenojar, Spain.
The UN says the humanitarian situation in the DRC is becoming worse, despite a recent ease in fighting. And the residents of Goma now face a crippling financial crisis. Rahul Radhakrishnan has this report.
It's usually a lot busier at the markets in central Goma, but no one's here to buy. This vendor says she knows she may go home having sold nothing today, but perhaps a hymn might make her feel better. The economy in eastern DRC is at a standstill, a painful fallout of the M23 rebel takeover in January. Many who work on the harvest have fled the fighting. This means with little produce coming from the fields, prices are soaring.
The war situation has meant that we can no longer have customers because many people had fled. The agents who are paid at the bank can no longer get their money because the banks are closed.
It was a payday weekend when the rebels took over. The banks have been shut ever since, and basic transactions have been impossible. It's seen as a bid by Kinshasa to put pressure on the rebels to slow their advance. But it's weighing heavily on the city's nearly 2 million residents.
This situation has a very negative impact on the economy, on traders who have to import goods to resell, who have to import raw materials, and who need their financial resources, their currency, to carry out these operations.
The crisis has disrupted trade flows from neighboring countries. We're at Le Petit Barrière, an important commercial crossing between DRC and Rwanda, the other side. The economic situation that the current escalation has caused has really changed the trade, but this used to be one of the most lucrative trade routes in the world. It looks as busy as it always has been, but vendors are struggling to get by.
It's true that there's a lot of traffic at the little barrier and anyone can cross to get to Rwanda. We used to find a lot of customers who could buy our goods. These days, we don't find customers like we used to.
Currency traders tell us the financial pressure here is building on everyone. The fear is that a crippled local economy will only exacerbate an already dire humanitarian crisis here. Rahul Radhakrishnan, TRT World, Goma, Democratic Republic of the Congo.
Well, that's all your business news for now. Thanks for watching.